Hello and welcome. Today we have with us Dr. Frank Aswani, CEO of the African Venture Philanthropy Alliance. Frank's background and experience ranges extensively between the social and private sectors. Before joining APVA, Frank held the position of VP and Director of Strategic Relations at the African Leadership Academy, where he led corporate partnerships, business development, and fundraising activities. Previously working with Absolute Return for Kids as the Regional Director for Africa, and spent 14 years with Eli Lilly as Sales Director for South Africa and Regional Director for Sub-Saharan Africa, where he worked in Kenya, England, Switzerland, and South Africa. Frank is a Kenyan national living in Johannesburg. He holds a veterinarian medicine degree with the University of Nairobi and an MBA from Gibbs Gordon Institute for Business Studies, University of Pretoria, South Africa. He's also a certified design thinking and design sprints practitioner. Frank, you've got the experience, everything from veterinarian to sales experience. Welcome and thank you for being here with us today.
Thank you so much, and I'm really happy to be here.
So today we're going to be discussing the APVA model, which is led by African impact investors who are working together to increase impact investing going back into Africa. The APVA is a fairly new alliance that mirrors similar alliances that we've seen in Asia, Europe, and Latin America. Frank, I know it's always really exciting to be part of a new organization that's being built because you end up with a lot of creative freedom in what gets created. Can you tell us a bit about APVA, how it came to exist, and what the motivation has been to create it?
Thank you so much, Janelle, and greetings to your audience. And yeah, we are really excited to be doing the work that we're doing at AVPA. We came about built on the success of very similar networks in Asia and Latin and Europe and now Latin America, where our sister networks in those regions brought together social investors to mobilize capital for impact. And especially look at our Asian sister network, AVPN. They've had a real success to the point where they're now the biggest social movement in Asia. And with Africa going through what it's going through right now, struggling to meet its SDG targets with a very young, high potential growing population, there was need to relook at how we can put Africa on the right path. And our model that looks to address the challenges that Africa faces a bit differently by bringing together not just providers of financial capital, but also those who are doing human intellectual capital onto the same platform, proved to be a no-brainer in many ways. So we're really excited to be doing the work that we're doing in Africa.
I love that the AVPA sees impact investing as a continuum, as do I. If money is being invested into an impact investment or through, say, a CSR department or to improve even ESG scores, the fact is it's all funds being invested with the intention of delivering a sustainable or social impact. That said, I think it's rare for an organization to encompass or embrace it all. Why did AVPA move in the direction to encompass everything from the philanthropic funding straight through to venture funding for the work that you're doing?
Yeah, so that's a great question. So if you think about a point of departure, it's always what problem are you trying to solve? And the problem that we're trying to solve and mobilize our network towards solving is the whole issue is how is Africa going to finance its social investment needs? And if you look at the SDGs as a framework, Africa needs between $500 billion and $1 to $1.2 trillion annually between now and 2030 to meet its SDG financing target. Traditionally, we've been heavily dependent on aid for that kind of funding and government funding, but we know things have changed dramatically, made all or even more worse by the COVID crisis. So for example, aid to Africa has reduced and is going to reduce. We've just finished doing a landscape study last year that can be found on our website that showed that in areas like Southern Africa, aid went down by as much as 20% in the last 5 years.
Oh, wow.
Yeah, and it's consistently the same across the continent. You saw that the UK government reduced its aid budget from 0.7 to 0.5% of GDP, and that's on the back of a shrinking GDP. In President Trump's era, USAID reduced its funding generally to Africa. So all these tell us that we need to look at how we're going to invest differently for Africa's sustainable growth going forward. And the only place where we can actually get money is the private sector. And so this is why it's so important to bring together these non-traditional partners, because previously your private sector players were in different platforms, your foundation and grant makers are in different platforms, but we need the collaborative competence and resources that they bring to enable us to actually mobilize the kind of capital we require. So this is why we talk about the continuum, where our investors are providing grants, debt, and equity, all playing different roles at different stages of building sustainable enterprises and sustainable solutions. And that's why we're big believers in the continuum of capital. But behind that continuum, we also believe that all these investments require non-financial capital as well. So we are also proponents of making sure that there's adequate exposure to human and intellectual capital at the same time.
Can you, I might just back us up a little bit too. And I noticed that on your website, you had the theory of change of AVPA on displayed. Can you talk us through the theory of change for AVPA?
Yeah, I think what we're trying to do is to bring, in summary, we're trying to bring together the soul of the development sector and the skill and discipline of the private sector. And our theory of change is that, in the context that we don't have adequate capital in the social sector to finance our existing development needs and social needs, how do we make social investments attractive to the private sector, where we have more than enough capital required to meet our needs? Mm-hmm. And so we are at that bridge between blending traditional development capital and private capital into this sort of middle ground of impact investing that brings together things like blended finance and those kind of things. So that's how we play and where we choose to have our influence and impact.
Right. Yeah, I'm quite surprised to hear that that you've seen a decline of 20% of, did you say it was philanthropic dollars or aid, or a combination of both? Into
yeah, it's mainly aid. It's mainly aid, and the other reason actually, Janelle, is it's also a crisis of success in many cases. So as more African countries move into middle income status, they become less deserving of aid. So that's another factor. But also we've seen a trend whereby a lot of our traditional aid agencies are moving from either aid to impact or aid to trade. So their priorities are changing. But what the bottom line is that we're getting less and less grant capital coming into Africa, mm-hmm. Which means a lot of our nonprofits who play a significant role in plugging in gaps that the government can't meet are struggling. With financing, but also that kind of capital that's required to de-risk social investments is also lacking because of just the reducing aid. So there's a ripple effect in the broader community and the ecosystem in Africa that we're trying to fix through the network of AVPA.
Right. And is that, I mean, is it perceived as a positive that, the African populations are moving into at a faster rate into middle class, that then means there's less dependence on aid? And therefore, a structure like AVPA is facilitating, investment back into, your continent. Is that seen as a positive, or is it not really discussed as a negative or a positive?
Yeah, when you think about our population growth and you talk about demographic dividend, it's only a dividend if you invest in that population. Otherwise, that population can become a liability, which means we've got to have the right education, the right economic opportunities for these young people. Our average age in Africa is 19. If you compare to the US, Europe, and Japan, which are anything between 42 and 51, we're a very young population. So if we can get this young population educated and set up for success going forward, we are in for a real boom on the continent. If we don't, we're in trouble. And I think that's what we need to be thinking about. How do we prevent that cliff from coming at us at a faster rate than we would like? We need to be able to build a bridge across the cliff to the other side of the river, and that's what we're trying to do. Is how do we fix that? So if you think about it, there's a huge positivity in the population growth of Africa and the young people that we're building, but at the same time, if we don't do a good job with these young people, we're in trouble.
Mm-hmm. Yeah, absolutely. So I'm curious, as AVPA is, assisting in building the foundation and the infrastructure around strengthening the foundation for being able to address like demographic challenges to economic challenges to social challenges. I'm curious if you are starting to see tension between the private sector and the nonprofit sector as the gap between philanthropic investments and venture investments gets smaller. And I'll throw this back to your theory of change, essentially, where it's a belief that you're bringing the two together to be a form of impact investing. And I'm specifically thinking about the significant increases of funds that we've seen in the ESG space, where ESG investments doubled over the past year, and where private sector has set fairly robust standards around impact performance and measurement. As an organization that supports philanthropy and venture investments, are you witnessing any tension between the two sectors as the private sector essentially is really quickening its pace on what appears like is taking the lead on impact work, certainly in the areas of dollars being invested and on the measurement standards?
Yeah, I don't think we're seeing tension. We're seeing more of uncertainty and anxiety. And I'll tell you why. The big difference is if you look at the two extremes, on one hand, you've got the whole community that are grant makers, those are foundations, aid agencies, and the others. On the other hand, extreme part of the spectrum, you have your private sector players. They both have been working in their spaces for a very long time, and they're very comfortable doing what they've always done. The uncertainty we're seeing is, what's this new space that requires them to work together? What's this new innovative financing space that not just requires, but necessitates that they work together if we're all going to move forward? And that uncertainty is brought by a lot of unconscious incompetence. People don't know what they don't know about how to play in this new space. So one of the things that we are trying to do at AVPA is to increase the competence of a lot of our social investors in innovative finance. And it's been a real challenge. When we came into this space, we through our study and a couple other discussions we'd had, this was highlighted as a major problem. The fact that most of our players don't know how to play in this new space, where you're blending grant capital and private capital, where you're looking at impact investing, where you're trying to get not just financial returns, but also social impact returns. So we set out to say, okay, we'll need to do some investor education, and we wanted to use African institutions. And we were totally shocked to learn that the whole of Africa, 54 countries, if you want to use an African institution of learning to design or run an African program on innovative finance, you have one choice. There's only one institution of learning in the whole continent that is able to offer a program, and that's University of Cape Town. Okay. Otherwise, you've got to go to Oxford, Cambridge, Duke, and those others to offer run the program for you. And you know how it is, they'll charge you an arm and a leg. They're not local. They can only come and spend time here, maybe once or twice a year. It's just not sustainable if we're going to move this content at the scale and speed we require. So investor education in innovative finance is one of our 4 priorities. And we're doing a couple of things. For example, we're going to kick off a fellowship, an investor education fellowship program in July, in collaboration with our agencies and network, where we bring together 60 social investors, 30 African, 30 Asian, into an almost international MBA type class for a 6-month program. And we believe that bringing together the Africans and Asians who are solving very similar problems in very similar economies will be really beneficial to both parties. Super excited about that program.
That's awesome. Congrats.
Yeah.
Looking forward to hearing the results of that program.
Yeah, exactly. Super excited. We're just in the tail end of some additional fundraising for that program. And then the second program that we want to do is super ambitious, because big problems require big solutions. And this is about building institutional capacity on the continent on innovative finance. So what we want to do is bring together the top 30 to 40 African universities and business schools into an umbrella called the African Alliance for Innovative Financing Institutions. And then have your Oxford, Cambridge's, Duke, Stanford, and other international universities with good innovative financing programs come and run almost train the trainer program with these 30 or 40 African institutions. And the view is that at the end of that program, these 30 or 40 African institutions can go back home and set up centers of excellence within the institutions back home on innovative finance. That way, we can roll out a lot more training programs for local social investors. We can build up more research bottoms up. We can build a lot more case studies, and all of this feeding up to an African body of knowledge, which we want to house in an innovative financing platform on our website. So that's a very ambitious program that also we'd like to welcome partners who would like to help us work through this. And as we think about aid leaving Africa, it's not necessarily a bad thing, but it will be a really sad thing if we leave the Africans incompetent to build on the benefits of 50 years of aid. because they are not ready to play in this new innovative financing space. So my plea to international donors and aid agencies, help us build a competent Pan-African social investment community by training them and building the capacity in innovative finance, and come and work with us on that one.
I love the program that you guys are doing, and it's certainly going to build capacity internally to be able to, I mean, all over the continent, be able to start to use impact investing, made up of both philanthropic and venture funds in new and creative ways. And I think we've seen, you know, every continent and every country it has their own unique way of how they're how funding is flowing through, and how those structures are being created, in terms of, you know, meeting the needs of the specific countries around their social and economic needs. And so really keen to see the work of this project that you've got underway with the multiple universities, because I really think that the outcomes of that are going to be uniquely created, you know, financing vehicles and structures that work for African countries.
Yeah, and Janelle, we believe that this program will do to Africa what the cell phone did to Africa in financial inclusion. We believe this program will make Africa leapfrog a lot of steps, and support Africa's progress towards meeting its SDG targets and improving the quality of life of Africans. And in the process, we believe we can mobilize more local capital, but most importantly, have Africans owning their own destiny by being competent and active players in this innovative financing space. Right now, they're not, and it's not helping us, and it won't help us going forward.
I believe that too. In our podcast we did with Deacon Impact in Toronto, Canada, we discussed blended finance and the trillions of dollars needed to close the financing gap to hit the 2030 SDG targets. Part of this you've mentioned is 500 billion from Africa, and I think you said upwards to 1.2 trillion. I won't pretend to know what makes up the difference between the 500 and the 1.2, but that's certainly a big number. And part of the work that you're doing is to unlock new money and maximize the impact of these investments. How is AVPA helping Africa meet the 500 billion financing gap as part of hitting the 2030 targets? And I mean, I think your answer, you know, around like the academic institutions and the internal capacity building is certainly part of that. Are you looking at different finance models like blended finance to help you get there?
Yeah, absolutely. So there are four ways with helping Africa get to address this gap. Firstly, we want people to understand the problem. You know, Einstein said, if you have an hour to solve a problem, spend 55 minutes unpacking and understanding the problem and communicating the problem. So the first thing we're doing is to make Africans aware of this gap that we've got and the root causes, and the fact that many of us have grown up with aid, and the reality is that there won't be that much aid going forward. So we need to get Africans out of the mindset of being aid-dependent citizens. So that's the first thing, really talk about the problem. The second thing is the investor education program that I spoke to you about, because we need to bring a lot more African investors into this space, and especially the smaller ticket size investors, where majority of the African investors play. So this whole investor education program is significant to that effect, and how we can help move that, because in so doing, we can also help mobilize a lot of local private capital. The third thing we're doing is specifically around our grant makers, because they are the bridesmaids in this equation. If they can transition and change their capital deployment strategy from just being pure grant makers to also providing catalytic capital and concessional capital and that type of, you know, fast loss capital that's available to unlock and de-risk social investments, we can crowd in a lot more private capital into social investment. So isolating the grant makers and helping them understand the significant role that they have to play, they're probably the most important players in this spectrum, is very, very important. And the fourth thing is connecting social investors. So we connect social investors on our platform, on our website, through our events. We have a deal share platform, because all the time we hear that in Africa that there's more capital than there are investable deals. So the deal share platform tries to address that issue by showcasing investable deals in Africa, and connecting African social investors to their peers, both internationally and locally, for co-investment purposes. We're also building out a couple of other platforms, like we started off with the first of our thematic platform, which is a gender platform. We plan to add additional platforms to reflect Africa's priorities, like an innovative financing platform. We'll have a couple more, like a healthcare platform, an education platform, an agriculture and agribusiness platform with time, maybe an SME platform. So all these platforms will build out to support these movements that are trying to shape Africa's economic future.
Oh, that's wonderful. Yeah, I mean, I would say just investing in general can have fairly high barriers to entry. And then, impact investing, I would say, has even higher barriers to entry because there's the challenge of needing to do education and, and for people to understand the benefit and the value and the returns that you can have in impact investing first. But I think, it is certainly more complicated than it needs to be, in platforms like deal share that you're talking about, that I think your members can access on your website. Is that correct?
Yes, yes.
And is it only
Yeah.
open for your members, or can anyone access it and look at the deals?
Oh, okay. So right now, the deals are visible to anyone, but for you to participate and be part of the community, you've got to subscribe to it. But until end of May, the subscription is free. So if you're an investor looking to play in Africa and you're looking for one, either to access investable deal flow or opportunities, or you're already an existing investor in Africa and you want to raise additional capital for growth, scale, or exit for your current projects, you can also use the DealShare platform. Or thirdly, if you're an investor providing non-financial capital, like human intellectual capital, whether you're doing strategy work, advisory work, you can also use the platform. So the DealShare platform, which we opened in the beginning of December last year, has proved to be a really exciting place. We've got about 40 deals now listed, and these are growing by the day because we've got to do due diligence with them all the time. And because AVPA is an investor-only network, all the deals on the platform have to be listed by an existing investor.
Right.
So any deal you find on the platform has an existing investor who is the one recommending or proposing the deal. So you'll see there's a name of the investor on the deal and the name of the business. And that gives you confidence that there's someone who's got skin in the game already in that particular investment, and they just want additional support or a co-investing partner. So those are proved to be really successful. But the DealShare platform is just the front end. It's a window of the shop. Behind the scenes and behind the window, we do a lot more stuff to connect investors. We've just done 2 what we call DealShare live sessions, where deals on the platform tend to are invited to pitch to investors. So we've had one on agriculture sector businesses are pitching. We just had one this week as well on the healthcare businesses. So we're doing a lot more stuff to connect investors to investable opportunities. We also have very bespoke events. We've had companies come to us and tell us, we want to raise a Pan-African fund to address issue X. Can you guys pull together investors from across the continent who are also looking at this issue? And we've pulled together up to 50, 60 investors to come and listen to an idea upon which they then join and contribute to. So there's many ways in which we can work with investors. Our role is to make our mission is tied to our mission. How do we support the increasing and increase the flow of capital into African social investments? And anything we can do to support investors to do that and deploy that capital for as maximum impact is what we're trying to achieve.
Yeah, I think that custom and tailored handholding and personal touch that AVPA is giving to investors is going to prove quite fruitful. I love that you're even, being as flexible as helping build funds. Not just investing in ventures, but creating new funds, which again, I think speaks to the flexibility that you've created around trying to build up the ecosystem. Can you tell us, you mentioned a few stories of how, startups and funds are already pitching, but can you speak just, of course, in high level information about any success stories that you've seen to date where you've had, investors invest alongside others? Or I know it's only been up for a few months, so that stuff does take time.
Yeah, so it's only been up for a few, and as I mentioned, we kicked it off the beginning of December. December in Africa is generally a dead month. People go on Christmas holiday, so we really got kicking off maybe mid-January this year. So we've had a real success story I'm proud of is a particular business in Nigeria called Nature's Bounty. It was listed by a firm called Samara Capital. Lisa Thomas is the head at Samara Capital, and they were looking for $65,000 of a convertible instrument. So the good thing about the Dealshare platform as well, it gives you options of different types of capital that you can instruments you can use to deploy capital. So you can either look at grants, debt, equity, convertible debt, convertible grants. So we'll keep building on that. So they wanted to raise $65,000. We managed to support them to raise that money through an angel investors network, and very proud of that. The fact they got that money within a very good time. The good thing is Lisa's very experienced. She had a really good package. She packaged the business very well. So we also work with them in supporting the packaging of some of these opportunities to be attractive to a wider audience. So that's one example of stuff that works. We've got quite a number of other investors who are at various stages of discussion with businesses and their co-investors. These last two Dealshare live sessions, the pitching sessions, have brought up some really interesting connections. So we keep testing different ways of connecting investors to opportunities and having appropriate bespoke support to investors to connect them to various opportunities on the platform and to each other as well. So we're very optimistic that this will prove to be a success.
Yeah, absolutely. Gender lens investing. So you did mention that you're going to have a few different platforms. Health was mentioned, gender was mentioned. Gender lens investing, of course, is trending in and not just in the impact investment space. In an attempt to primarily address the lopsidedness of investments. However, gender lens investing has also many other significant impacts associated with it. Why did AVPA make gender lens investing a priority? And how do you anticipate this will affect the African landscape?
Yeah, that's a great question. So it's all of this kind of happened last year in 2020 as we sat and worked remotely. And as we were trying to kind of get ready to launch our work and operations, our initial feel was the first area we should look at to addressing is youth unemployment, because we believe it's our biggest risk on the continent. As I mentioned to you, we have an average age of 19. We need to be creating 1 million jobs a month. That means 12 million jobs a year to meet our job needs on the continent. Instead of doing 12 million jobs a year, we're only doing 3 million jobs a year. So every year we're facing a 9 million job deficit on the continent. And this is compounded over time. So that was kind of where we thought we'd go first. Yeah. And then as we sat through the COVID crisis, we brought in, we built 3 communities of engagement of partners to support resource mobilization in Kenya, Nigeria, and South Africa. So the fantastic, we had over 600 organizations join the 3 platforms. And we helped mobilize and connect people. It was really fascinating to just see how people came together behind our platforms. It came out very visibly and evidently that women were probably the most affected through this COVID crisis, either through job losses or issues in the houses from domestic abuse, domestic violence, and all those kind of things. So we then said, no, let's actually change tack from youth unemployment to gender. So that's one of the reasons why. And as we go to dig into this gender space, we actually found it's not just about, people think that we look at the gender space or a lot of actually these impact areas, that is all about just putting in money. But there's actually a lot of economic value in getting our gender equality right. In Africa, if we get the gender equality right between now and 2025, we'll add 10% to the GDP of the continent. We'll add almost $360 billion to the continent.
Wow.
So there is a very strong business case for getting gender equality right. And so we're not paying lip service to this particular focus area. We're very deliberate about investing time and building an ecosystem of players to really move this area forward in terms of the attention and focus and resources it deserves. So on our gender platform, we have 3 communities of practice. There's a gender lens investing community of practice. There's an economic empowerment community of practice, and there's health and GBV. And we're focusing more on the gender lens investing, where we're supporting women-led entrepreneurs and businesses or investors playing in that space. And we're also supporting initiatives that are supporting talent growth of women leaders in various multiple sectors, and also the growth of female fund managers. There's less than 5% of the fund managers in Africa are female, and we've got to move money towards gender lens investing. We need to have a bit more gender lens in the investors and the decision makers at the same time.
Yeah, I couldn't agree more with you. Frank, thank you for speaking with us and our audience today. It was a real pleasure, and congratulations again on getting AVPA up and running. We look forward to having you back in hopefully less than a year to learn more about the impact performance of your work and the difference that it's made.
Yeah, thank you so much for having me on this on your podcast. I'm super excited. I'm hoping that you can feel the passion in my voice as I talk about my desire to change the future of my continent, and using AVP as a vehicle of collaboration. I ask any of you who are looking to plug into supporting Africa in any form or manner, please reach out to us. We are happy to connect with you. We're happy to work with you. If not, even if you're undecided as we speak, just, my email will be available. Just reach out. We can start a general conversation and see what we can learn from you as well. But thank you so much for your time.
Yeah, of course. And if nothing else, they can check out the deals that are available on your website through DealShare.
Exactly. Yeah. And also we have a really good landscape study. We did a phenomenal social investors landscape study across 18 countries in Africa, where we mapped out all the social investors, from angel investors, DFIs, aid agencies, to you name it. And it's a phenomenal piece of work. If you can, please have a look at it. It's on our website. It's under our Value Hub.
Wonderful. Thanks for directing us toward that resource. I'm keen on reading it. There's a group of impact investors in Canada who recently did a landscape report, and some of the findings were quite stark, but also, when you can uncover things that need work, then there's optimism and positivity, hopefully, in resolving and fixing them. So looking forward to reading your landscape report as well. Thank you so much for our audience for joining us today. You can learn more about AVPA at avpa.africa. Thank you all, and see you next time.